The first rate cuts since May 2022 are predicted to take place early next year, with some experts predicting that could spark another property boom. So this is all according to the ASX RBA target rate tracker. You can go online and you can look at this. So it's expecting a rate cut of 25 basis points in February. That's interesting timing ahead of a potential federal election. There are 3 more cuts anticipated by August. That's what the markets are pricing in at this stage, and their forecast drops, well, they're based on US interest rates, which would increase the Australian dollar and give the RBA confidence to drop the cash rate. So the headline figure there, potentially, as you see there at the bottom, potentially 4 RBA rate cuts predicted next year. It doesn't mean it's going to happen. That's just how things are looking at this stage. Let's bring in the KPMG chief economist, Rynne, for his thoughts on this. How accurate do you think this could be, Brendan?
Oh, look, I think it's a fair possibility. I mean, one of the things to recognise is that we're starting to see inflation coming down quite dramatically, not only because of the cost of living policies that are being put in place by the government, but also just pricing pressure more generally is coming out of the economy. And so one of the things you really need to have a look at is the real interest rate. So it's the cash rate less inflation. Now, at the moment, that's still not contractionary enough for the Reserve Bank to start cutting rates, but it will be in February, I think.
Okay.
We've been saying that for some time. I know the market's suggesting that now. But the likelihood is that we'll have multiple rate cuts next year. And as you said, the ASX futures is saying that it'll cash rate will get down to about 3.1% by the end of next year.
So that means, I mean, look, I'm not the expert here. You are, Brendan. But look, if the average mortgage about $1 million, if there's 4 rate cuts, what's the saving there? And then does that lead to another property boom?
So what we'll see is savings of about 1% on your mortgage interest costs. And as you said, average house is about $1 million, 800,000 in mortgage payment. So, working the maths out from there, about $8,000 in interest savings a year for the average household, wow. Which is going to go a very long way to helping with cost of living relief over the next 12 months. The issue is going to be that whether it translates into a housing boom really depends on how the banks pass the savings costs through, and what that also means in terms of borrowing affordability for the individual household. We know that many households are stretched at the moment, so it might translate into higher asset prices a little bit, but I certainly don't expect it to cause a skyrocket like we saw during COVID.